Hi, welcome to the Crypto Republic. Before we begin today, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest high energy updates in digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to the Crypto Republic, bringing you updates every day at 9 a.m., noon, and 7 p.m. Eastern Standard Time. Like always, your support means so much to this channel. Thank you to everyone who likes these videos and subscribes. These simple actions help me keep bringing updates. With that said, let's jump right in. Have you ever wondered why XRP hasn't taken the role everyone predicted, the coin that could power a new global financial system? Today, we're uncovering a hidden path, a shift that no one is ready for, that could change everything about how XRP fits into the world of banking. And trust me, what I found in the Bank of International Settlement documents might be the most important clue yet. In a previous episode, we explored Ripple's $500 million deal with Citadel and Fortress. The obvious question was, what is all that money actually for? But the answer led me down a rabbit hole into BIS reports, banking standards, and wholesale CBDC pilots. And what I found there completely reshaped my view of XRP's potential. Let's take a step back. Around the world, banks are quietly creating private financial systems. These are closed-loop ecosystems where banks settle transactions using their own tokens, like JP Morgan's Onyx or the Bank of England's Finality system. Japan is doing the same with bank-issued tokens. Every major market is experimenting with their own internal currencies. On the surface, this looks like a problem for XRP. These private systems decide to rely solely on bank-issued money. XRP could be pushed out entirely, relegated to operating in the public space almost like XLM. But here's the twist, folks. Ripple anticipated this challenge years ago. The Trojan horse. Ladies and gentlemen, Ripple needed a way in. Enter RLUSD, their stablecoin. Think of it as a Trojan horse. On the surface, it's all about RLUSD. But inside, XRP quietly integrated into the system. The strategy? RLUSD is already compliant with existing regulations and has been accepted in Dubai as a test case. This allows XRP to participate in the wholesale financial system without being labeled a currency or settlement asset, which would have triggered strict new regulations. This is where history provides an interesting analogy. Think back to the gold standard. Nations were careful about how gold was integrated into the system. If you introduce gold incorrectly, it would destabilize the economy. Ripple's RLUSD acts like a carefully minted digital gold inside the banking world, hidden, compliant, and quietly essential. Let's talk about XRP as a conversion asset. Here's a critical insight. XRP isn't just a currency. It isn't a settlement asset. It's a conversion asset. In private banking systems, banks often use tokens that don't speak to one another. JP Morgan coin doesn't communicate with Citibank coin. This creates closed markets. To bridge these gaps, you need an asset in the middle. XRP's ability to act as a conversion asset places it as infrastructure. Banks don't care about flashy marketing. They care if it works reliably. And that's exactly what Ripple has been building. Let's talk about historical context and analogy. Everybody knows I love history. Let's put this into historical perspective, ladies and gentlemen. The concept of a neutral intermediary has been used for centuries. During the 19th century, clearinghouses in the U.S. served as neutral parties to settle bank transactions. Without them, chaos would have reigned. In Europe, the BIS itself was created in 1930 to stabilize post-World War I debts, acting as a central conversion point between nations. Well, XRP is essentially the 21st century digital version of these intermediaries, bridging private systems that otherwise wouldn't communicate. Seeing history repeat itself here reminds me of a lesson I learned back in the summer of 2010. Back then, another physical commodity deal we did and trading commodity deal with this, the people that retain myself and my organization in any capacity, we do a recce always first. You're always going to have to do a recce on anything you do first, because everybody here knows I talk about having the mechanics, a plan, a strategy. Back then, there was a problem called the migrator. I had learned about the migrator, this pesky little insect, from the John Steinbeck books, The Grapes of Wrath. Great movie, too. Well, out over to North Dakota, Wyoming, Montana, they were having a problem so bad with migrators And this goes back to something I was taught by floor traders that had been around since the 60s, 70s, and 80s. This was something really rough. You got it on TVs. The, locusts eating grasshoppers eat everything. Well, there they had an area the size of New Jersey with infestation. Upon arriving in Wyoming, I went to go pay a visit to all the crop dusters. I started with them. I wanted to see if they were working, okay? I really wanted to see what the damage was going to be and what it would cost to spray per acre. The spray per acre of insecticide is $1.65. Okay, the crop dusters weren't working as much. They weren't getting paid $1.65. Now, the problem with the migrator is if you spray an area where it's already full grown, it could fly up to 60 miles. So they didn't want to spray it out. Now, the year before, you had cattle prices suppressed. You had some guys that weren't even selling any of their cattle because their cattle was 30 pounds less. If you don't have any grass, you don't have any corn, soybean, you don't have alfalfa, you're not feeding your cattle, okay? So the cattle weren't doing well, okay? So that was the first step. Now, looking at all this and seeing the fact of how bad the infestation was, and it wasn't really being reported very much on the news. And this is 2010, right? So you could sit there and say this. Physical commodity deals, trading commodities deals were always done like this. You go do a recce first. In that recce, you find out everything because this is your trading plan. This is your mechanics. This is where you're going to put capital to work. This is the cause, who, why, and when you're going to exit. So after getting all the information that we could get on what was going to happen to the wheat crop and what it was going to affect the Chicago Board of Trade, the CBOT, where everything was going crazy, we made our positions, we made our move after seeing that there were some big problems in all the major states. So we put plan to action, okay, that summer. Why I'm talking about this now is people talk about how a surge will happen, okay? Well, if you do planning before the surge happens and you see it coming, that's how you can take advantage of something. And when the surge does happen, it could blow like Mount Vesuvius. And where it goes, who knows? So our journey started from all the facts and data that we had gotten on the migrator, the facts that we had gotten on the cattle prices, everything that was happening on the ground, okay? And, the crop dusters, they weren't working. So to me, I could see what was happening. We put thought into action, took positions. Now, what happened by the end of that summer, I will never forget. Wheat hit a 2-year high then, and then Russia had the worst drought in a century. Okay? Russia's drought was so bad that they would export between 60 to 65 tons of wheat. They were going to export at most 2 to 4.5 million tons. That was it. Now, to make matters worse, Pakistan had some biblical flood that year, and it wiped out a lot of their crop, okay? And also, Ukraine, that was a very big as well. That was a huge exporter of grain and wheat. They weren't going to export anything. So why I'm talking about this and to tell you why this brings into what I'm seeing right now is you do the research. You got your plan. You got the mechanics. You got the markets. You got the fundamentals. You put it into play. Okay, you got your plan. You looked at everything. Your recce was complete. You Gucci. You good to go. Okay, you roll the dice. You cross the fingers. You pray to whatever financial gods up there that you say this is going to work. But it's backed by a hardcore strategy that you did put into place, and then you let it ride. And sure enough, those prices exploded because of those other factors that I could not see coming. I could not tell you that Russia was going to export anything. We didn't know that Pakistan was going to have a flood. There is the supply shock that people are talking about. Now, how I bring this into XRP, we can see that there's things coming, right? So if you take a position in yourself, you'll be early. Why I look at this now like XRP is because when these shortages happen and supply shocks happen, it happens overnight and there's a domino effect. It's almost like someone throwing a brick into a lake and then the little ripple effects come out from that brick hitting the water. At some point, ladies and gentlemen, there could be the point where that brick does hit the water and the ripples go out. Let's get back to, if we look at the Bank of International Settlements, Principles for Financial Market Infrastructure, FMI, Principle 9 states, financial market infrastructure should settle transactions in central bank money where practical, and if not in low-risk assets. This confirms the private system's preference for bank-issued money and the challenge for XRP. And here's the clever part. XRP can't operate outside these settlement requirements. By being a conversion asset, it avoids the regulatory burden of being a currency or settlement token. It quietly becomes the backbone of the system, exactly what Ripple intended. How XRP becomes infrastructure? For XRP to fully operate as infrastructure, there are 3 key steps. Policy validation. XRP must participate in sandbox environments, like Singapore's Project Garden or the UK's Digital Security Sandbox, which tests public to private chain interoperability. Proving non-settlement, XRP must demonstrate that it sits outside the wholesale system while providing conversion between tokens. Operating assurance. Compliance documents must be published, including window plans, equity buffers, instant response procedures. Once these steps are complete, XRP is officially recognized as a critical service provider, silently enabling the private financial system. The future path, you might ask, ladies and gentlemen? Once XRP is recognized as infrastructure, the possibilities are immense. Every CBDC banked issued token or stablecoin that doesn't natively communicate can leverage XRP as the conversion layer. This makes XRP essential to the private financial system, yet invisible to the public eye. A strategy reminiscent of historical intermediaries, quietly enabling global finance. The big takeaway here is this. XRP's future isn't about speculation or price jumps, ladies and gentlemen. It's about being the hidden backbone of global finance. Ripple has engineered a path that allows XRP to participate in private wholesale banking systems without regulatory interference. So what's next? Watch for the release of Ripple's compliance and operational documents, wind down plans, equity buffers, and instant response procedures. This will mark XRP's official entry as a critical service provider. And as always, if you want to follow along and position yourself for this inevitable evolution in finance, like and subscribe and share this video. Every episode of the Crypto Republic digs deeper, bringing you closer to understanding the hidden forces shaping XRP's adoption. Stay emotionless. I'll see you in the next episode of the Crypto Republic. If you enjoyed this, hit like, subscribe for more deep dives. Comment your thoughts. Did you see this coming? And as always, this content is for informational and entertainment purposes only and should not be taken as financial advice. Always do your own research and consult a licensed financial advisor before making investment decisions. Remember, the game is changing, and those who understand it first will benefit most. Make sure you're on the right side of it. You have two choices. You can be like the crowd, reacting after the move, rationalizing why they missed it, telling themselves they'll never let it happen again, or you can be the one who saw behind the curtain, the one who understood the infrastructure shift, the one who positioned early not randomly, but intentionally. Because some moments in history are loud, but the ones that change everything are quiet, right up until the moment they're not. And this is one of those moments. Do not blink, because the world is distracting you with noise. And when XRP continues developing behind the scenes and building momentum in the broader digital asset landscape, stay sharp, stay informed, accumulate knowledge. Your move now will be remembered. This is not the end of the story. This is just the beginning. If this opens your eyes, smash that like button, ring the bell, and leave a comment with your thoughts. Turn on notifications, and most importantly, subscribe to the Crypto Republic. We break down the major global banking trends shaping digital assets today, giving you context, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, and stay in the Republic.